A black day for the Nikkei. Japan's benchmark stock index fell by a record 4,451 points to mark a more than 12% loss on Monday. The Kospi in Seoul down nearly 9%. Those precipitous drops came as interest rate hikes from the Bank of Japan continued to strengthen the yen against the dollar. Good news for Japanese consumers, but bad news for the country's exporters like automakers. The Nikkei is now officially in a bear market, down more than 20% from its most recent peak.
I think there is some panic selling happening here. Up to now, short-term investors have been piling into Japanese stocks, and we're seeing those positions being unwound all at once.
The sell-off spreading worldwide, European shares near six-month lows as indexes followed Asia down, though much less sharply. Investors are chiefly worried that the world's top economy, the U.S., is headed for a major slowdown, if not a full-blown recession. A boom in AI stocks has begun to deflate amid a raft of disappointing earnings reports from tech firms. Meanwhile, Friday's U.S. jobs report, with 114,000 new payrolls for the month of July, came in far lower than expected, the hiring slowdown bringing unemployment to its highest level in 3 years. The Federal Reserve has raised America's benchmark interest rates to their highest levels in more than 2 decades, part of a largely successful bid to bring down inflation that peaked at 9.1% in mid-2022. Investors, though, now worried that the Fed has held rates too high for too long. Many are expecting the bank to begin cutting rates aggressively to try and hold on to the U.S. economy's soft landing.